Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Coming to you live from the CNBC TV 18 Motilal Oswal studios. It's Wednesday morning. It's a very hazy sort of outdoors here in Mumbai. And those of you who are tuning in from Delhi, I can tell you it's not true. It's gotten worse here in Mumbai as well over the last couple of days specifically. So something we'll report on as we go on as well. But we've got markets to track, guys. Morning.
Hi, morning guys. Yeah, absolutely. I guess that's the real negative Q. Market Qs we can handle, but the fact that you're dealing with 300 plus AQI in Mumbai, very, very poor visibility, the capital also choking. It's just unfortunate. That's all one can say. And now we're looking up to the rain gods for some relief.
Well, that's right. You know, every time you heard about those visits to Delhi and people saying that it's really hazy and really polluted, well, getting a sense out here. You wake up in the morning and you just look outside the window and very, very dull. I think AQ. Oops. I hope something.
Do you guys use air purifiers at home?
Yes, two. I have two.
Discussions have started now.
So I've never used one, and I think I've come close many times in the past.
Yeah.
But this morning I was just looking. I think I was checking out. Philips makes one.
Yeah.
Sold out. On I think checking out the website, the Philips website, and a few others as well. So obviously this is a common problem across the board with many facing it.
Well, I plan ahead of time. I got the second one just a couple of months ago because I don't know. I fear this, So and it's really helpful because when you go to clean it, you see the kind of the only investment I think I've made in the entire year. Worth it.
My logic so far has been maybe twisted that you got to do this. You're going to do this inside, right? But you got to step out.
Yeah.
So are you actually weakening the body a little bit to be able to deal with what is actually out there? So but now I'm not so sure looking at the situation outside. But well, that's air quality, right? And I think you're driving through a fog. Here in markets as well, you're kind of sort of driving through a fog. You don't really know, not very much clarity at all. And I think the markets are reflecting it over the last 2 or 3 days. Very indecisive. Broader markets seeing a fair bit of pain. Large caps hovering near highs even after yesterday's sell-off. So, that's essentially where we pick it up from. Now, global Qs are better and better for the third day running. US equities bounced, and this is the third day straight rally. S&P 0.99%. Nasdaq ended about 0.67% higher and recovered about 1.3% intraday from a drop earlier in the day. That's the story. So actually, if you look at it, about a 2.5% intraday bounce on the Nasdaq by close. Just in terms of these stocks, large stocks, because they singularly have become so important for what the index does, right? Nvidia, for example, ended about 3% lower on news that Meta could buy chips from Google. The TPU chips. AMD, and this is the point that I was making earlier, yesterday and day before yesterday as well, the fact that Google it's perhaps the most full stack AI company, but was not focusing so much on AI. Maybe they didn't put their energies behind it, but they got chips, they've got distribution, they've got social media, they've got, and of course, everything basically, right? Most integrated, vertically integrated player. And the market's been, of course, focused on which is the winner, which is the OpenAI ecosystem. But now you've got suddenly this Alphabet and Google, which perhaps are in play as well. So there is that dispersion underway as well. So it's not just sort of, if you want to play AI, this is it. I think it's getting a little more dispersed. AMD was down about 4.5%. Dell reported strong earnings after close and shares were higher. You got one more gentleman from the Fed once again calling for large interest rate cuts. But of course, he's Mr. President Trump's man on the Fed. So maybe you got to discount that a little bit. Now, the more important thing is there's reports that White House National Economic Council Director Kevin Hassett has emerged as the front runner to serve as the next Fed chair. This is important because President Trump has repeatedly said that when Chair Powell retires in May, that is May of 2026, he expects rates to come down dramatically. Will it happen or not is a very, very different question, because it's not just up to the chair, it's a vote. And as we've seen in recent months, many have opposed large rate cuts, many have been in favor of it. So it looks like it's not going to be as easy if you just get your man to occupy the Fed chair's chair. Macro markets, 10-year real down 2 basis points. Oil prices 1.5% lower, $62.5 a barrel is where we finally ended. And in terms of Russia, Ukraine, as we've been saying, and we discussed this yesterday, that we look to be closer than we've ever been to ending this war, at least a ceasefire. And Trump essentially was quoted as saying that he's going to meet Putin and Ukrainian President Zelensky when the deal is in final stages. That's the global picture, the global news flow. As I said, it's a little muddy, unclear. Here in India, I'll just leave you with supports. The Nifty, with the sell-off that we saw, ended exactly almost at the 20-day moving average, which is 25,847. And I think we ended 15, 20 points above that level. We touched it, by the way, and then kind of bounced a bit. Nifty bank support is 58,398, which is the 20-day moving average for that index. And there is some distance to go before that comes into view, clearer view. So that's the picture. GIFT Nifty gives you a quick sense of how we're likely to start, and we'll pick it up from there. 100 points higher is the indicative open on GIFT Nifty. Let's go across to Nigel, who's standing by with the F&O positioning and the stats there. Nigel, over to you.
Well, the final series of the year does kick off today. That's the December series. And the bulls, they thought they had it in the month of November as well as in the November series. However, towards the end of it, you did have the bears that did fight back. And that's why you had a flattish with a marginally positive series that played out in November. But the bulls will want to end the year with a flourish. And that's the hope with regard to the December series. And if you look at the last 10-year average or thereabouts in terms of returns, it's not been too bad. The Nifty and the Nifty Bank, they have a 50% hit rate. And the average returns, hover anything between a little less than 1% on the Nifty Bank to around the Nifty at around 1.5% or thereabouts. So the bulls will be hoping for something on these lines for the December series. Now, the biggest cue is going to be the India-US trade deal. Even at the start of November, there was hope and there was some optimism that will come about. Now that time is passing and now you'll want to see it sooner rather than later, because otherwise a sell on news can play out once that news does come in there. So the India-US trade deal, that's going to be the key monitorable for the December series itself. Moving to the rollover picture, well, the market-wide rollover picture, that's more or less in line. However, if you compare the Nifty futures rollover and compare it with an average of the last three series, it's a little bit lower on that front because the index itself, the Nifty futures open interest is lighter in comparison to the previous few series. So if you just look at it at the start of the series, that's the data point. We start December much lighter in comparison to what we have seen in the past. And that's reflected with regard to the FI positioning as well. Because the FI as well at the start of the series, they are net short, but not as net short as what we have seen in the past. In percentage terms, it's at around 85,000 contracts, while 85%. And in absolute terms, it's around 95,000 contracts. Clients on the flip side, yes, they're net long, but not as net long as what we have seen in the past. So you have the FIs that are short, the clients that are long, but not as long as what we've seen in the previous few series itself. What else is the FIs in terms of positioning? Yes, they're short in index futures, but on stock futures, they continue to remain net long. And if you're looking at the options data, the number of calls that are written at the start of the series are more than the number of puts, which is telling you at higher levels, you're expecting some kind of resistance to come in, going by the FI positioning in the F&O market, which brings us to the levels. Till the Nifty holds on to that 25,500, 25,800, which is around the 20 DMA, 25,800, you'll say that the bulls believe they want to seek higher levels. They'll want to end December with a flourish. And I won't rule that out, actually, that December could actually be a pretty okay month because the kind of selling we've seen in the last few days. Resistance, though, comes in at around 26,150 because they've gone to this level numerous times and we're getting rejected at these levels. So that becomes an important number. Data points that we're looking at, India Q2 GDP number, that'll give you a sense about domestic, the economy, how's it doing. The trade deal, as well as the US, that Fed rate cut is something that the bulls will require to see. So it's going to be an interesting series. The Nifty could hold its ground, but I'll be more interested to see the broader markets actually participate because that's been the pain point in the last few days and for the November series as well. So performance in the mid and small caps is something I'll track.
Oh, absolutely. And for the timing, actually, on that rate card, the probability is jumped to as high as 83%.
Yeah.
If you go by the FedWatch tool, the CME FedWatch tool, that is. Market is overwhelmingly positive on the chances of a rate cut in December.